Hello and welcome. You have tuned into Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, you will get a chance to get your stock-related queries answered. But before that, let's have a quick look what the markets are up to. So Cheryl, a fresh start of the week and seems like that the markets are not in a great mood right now. It's a bit of a fall coming in on the benchmark indices.
Absolutely. A very good morning to you, Shrishti. And Paul, you could actually say the markets have been very volatile since the word go, actually. We've been actually fluctuating between the gains and the losses since morning, and that's exactly how it's transpiring. So you can't exactly pinpoint what sort of a trend or which side of the fence is the market actually tilted towards at this point in time. But no doubt, Nifty Bank underperforming the benchmark indices is down about 0.5% as we speak, inching towards the day's lowest point. The advanced decline ratio for now is a tad bit tilted in the favor of gainers. But you know, 12 o'clock is the time when the markets actually decisively turn and actually choose a path. So let's wait and watch which path the markets actually choose over the next course of next 1 hour. But if you look at the list of gainers, then it's the cement counters that are seeing good strength. So you have Ultratech, that's the top gainer in the Nifty, followed by Grasim. Then you have Shriram Finance, you have Maruti Suzuki, Apollo Hospitals amongst the other set of gainers. While on the flip side, in the losing end of the market, you have HDFC Life, IndusInd Bank, L&T, NTPC as well as BEL that are declining in trade. Let's take a look at the sectoral indices and what the picture is there at this point in time. And if you look at the sectors, it's Realty Index that's seeing gains of about 1.5%. Strong gains coming for Realty Index. You have Pharma Index as well holding on to good gains. You have broader markets outperforming the benchmarks. While on the flip side, it is PSU Bank Index as the top sectoral loser, about 0.7% downtick coming in for PSU Bank. FMCG, oil and gas as well under pressure in trade today. So yes, you cannot decisively say which side of the fence the market is going to go towards, actually, Shrishti. But for now, it looks like a volatile Monday at least.
Well, yes, a volatile Monday, definitely, but the cement pack is definitely holding up strong, and that's the outperformer sector is what we can say. But let's move on, viewers, and let's start taking all your stock-related queries onto the show. But before we move to that, just a small note that you can connect with us live on a WhatsApp number that will be flashing on the top of your screen throughout the show. You can tell us your name, the stock that you have invested in or you wish to invest in, and the quantity that is already in your portfolio or you wish to add, and also don't forget to tell us the time horizon you wish to stay invested. But with this, let's get started then, and let me welcome two of our very special guests on the show today. We are being joined by Kunal Bothra to guide us technically, and Gaurang Shah is here to guide us fundamentally. A very good morning to both of you, and let's get started then. And the first query that I have is coming in for you, Kunal, because Nikhil from Noida wants your take on RBL Bank. Can he buy the stock at current levels, because he's just put down a lot of these data points for RBL Bank where the stock has been an underperformer. It's been actually quite volatile, but even in today's trading session is a bit under pressure. So what's your view on RBL Bank? A good buy?
So good morning. I think I would believe that it's time to stay away from RBL Bank, because till just about few weeks back the stock was maybe showing signs that it could form a bottom around the 160-75 odd mark. But the way the stock has been falling consistently over the last I think 4 or 5 months, is the 5th or the 6th consecutive month where RBL Bank is showing signs of downtrend. It's fallen from 250 to 80 levels to now almost 150 odd mark. The concern for the charts now is that the monthly and the quarterly charts are now getting into a breakdown mode for RBL Bank. So in case if the stock is unable to recover in the next 3-4 weeks, then I believe that the prospects for RBL Bank could become a lot more tricky over the medium to long term. So it's more of a wait and watch scenario for RBL Bank, because at current levels the indicators are poised at a much more bigger weakness for the stock on the longer term basis. If that happens, then I believe that the stock could correct more. So it's better to stay away, not venture into the stock as of now. Let the prices come back into a recovery mode. That's where I think indicators would stabilize and a better opportunity could arise for RBL Bank.
Alright, so That's about RBL Bank. Remember, this one is in news as well. So that's one of the reasons why you're seeing the sharp knock come in about on the counter right now. But let's take this next query then. This one is coming from RK, and he's holding about 200 shares of ITD Cementation, which he's purchased at a price of around 400 rupees per share. He's saying that the stock had seen a good run up to about 700 rupees per share, but from there on, it's actually given up those gains. So he wants to know whether it makes sense for him to stay put with the stock or look to go ahead and book whatever minuscule profit now that he's making on this counter. Good morning, Kunal. Good morning, Gaurang as well. And Gaurang, let me come to you on ITD Cementation. What should RK do? Do you think the fundamentals warrant hold on this counter rather than booking out profits?
Thank you, Cheryl, and morning to all of you all. So this is what we always say, you should always tie down your expectation in terms of what kind of returns you want to make from your investment into stock market. Here is a case wherein you bought in at 400 or that roundabout levels. You saw the stock going up to 700 plus. You were very comfortably making a very decent return at that point of time, but you wanted more returns. And the resultant is that you lost out on that kind of profit that you're making, and you're making a little bit less profit than what you used to make. So I won't give a specific comment on ITD Cementation because we don't have a coverage, but let me say this, that it is a very strong company in terms of the sector that it is operating in. You've got a very decent order book and the earnings visibility is very, very strong. But I would again say the same thing that, when you invest into stock market, you should not expect each and every investment of yours to give you 50, 60, 70, 80% return or more. I think 20-25% return expectation is fairly reasonable enough per annum. And if you compound it over a longer period of time, you will get a much more better return. But prudent to revisit your investment and book profit accordingly whenever you're getting the return which you had anticipated. No specific comments because we don't have a coverage.
You have a view on ITD Cementation given the fact that it is off those elevated levels that the stock had actually seen. 400 is the buy price, making minuscule profit now. Do you think he should go ahead and book profits or stay put with ITD Cementation?
Yeah, I've been tracking the stock, over the last many months, and looks attractive. In fact, the stock made a high which was around the 650 plus mark, corrected towards 500 or sub 500 levels. I think the last time I remember for ITD Cementation. So I think it's now getting back into a zone where the stock is stabilizing. It's done exceptionally well on the long-term basis. I think there was a point where the stock had done, a strong positive upside for quarters and for a few more years over the last 4-5 years or so. So I think it's been a good stock. I think it's a quality name. You should hold on to these kind of stocks on the longer term basis. There could be a point like what we saw in the last 2-3 months where the stock may come back into an excess mode, overbought scenario. It may consolidate, correct, but then eventually these are the kind of names which you should probably keep as a part of your longer term portfolio. So I would definitely recommend a hold.
That's a hold coming in on ITD Cementation, but the next query that I have is coming in on a couple of these hospital counters. And Gaurang, if you can help Mahendra, who is a senior citizen and wants any of your top bets from the hospital space. He's highlighting that stocks like Apollo Hospitals, Aster DM, they are doing well. So for the medium term perspective, any stock that you like?
To you as well. So, fundamentally, our view is 12 months, 16, 18, 24 months and more when you talk about investment ideas. 3, 6 months, 9 months are fairly, short to medium term according to us. And if you really want to make a meaningful return out of your investment, and if you're not in need of the money and you have time by your side, then I think you could let your investment grow with a long-term perspective. And if he has that kind of a long-term perspective, we have 3 recommendations in the healthcare stroke hospitals universe. First one is by default Apollo Hospital. Second one is Narayan Rudalaya. And third one is Fortis Healthcare.
All right, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get you answers for all of your stock-related query. We have our experts standing by very patiently. We have Kunal Bothra on the technicals, while we have Gaurang Shah on the fundamental. And let's continue taking your queries then. The next one that I have is coming in from Professor Thomas George, who's writing to us from Kochi. He has 100 shares of Cochin Shipyard at the price of around 1,510 rupees per share. Very simple question, Kunal. What to do now?
Definitely a hold for Cochin Shipyard. I think at current levels, you may even consider that potentially to add further quantity in case I think you have available funds, as well as you're looking to broad base your investments, because my sense is that many of these defense shipping stocks, etc., I think these stocks have formed a near to medium term bottom, at least in terms of prices. There was a point where these stocks corrected by a margin of I think 50% or more in the span of the last 6 months. So I think a major part of the correction seems to be now behind. The stocks have retraced back towards their longer term moving averages. So that retracement is also out for these stocks. I would believe that that these stocks are very attractive from a medium to long term play. The only catch over here is that there could be a possibility that these stocks may just about get into a first time wise correction for maybe the next 2-3 months before they get back into the momentum groove and come back into a much more stronger price uptrend. So if you're okay with holding on to these names for a medium to long term play, I would suggest a definite hold as well as an add.
All right, that's the take coming in on Cochin Shipyard, but let's put the spotlight on Bajaj Housing Finance because a couple of our viewers are wanting to have a take on this particular stock, wherein Jay Prakash wants to know, Gaurang, what's your take on Bajaj Housing Finance? He has already bought these shares at a price of 141 rupees. Is this a good buy at these levels, or should he stay invested?
So, Srishti, as all of us know, it was after a very prolonged period of time that we saw a IPO from Bajaj Group. Now, we did not cover during the IPO, nor did we have a current standalone report. But let me say a couple of things over here. It comes in from a very strong pedigree group. Second is, during the IPO, the management had mentioned that their run rate per annum for growth is close to about 12 to 15%. And the opportunity is huge for companies associated with HFC segment, that is housing finance companies. Though there are a lot of companies and the competition is of the toppest level, but I think this is also one of the strongest companies, and the valuation at which the IPO was according to us fair enough. It was not expensive, and rate cuts, if they happen when next year, subject to, of course, inflation ebbing off and GDP being supportive, which was a howler last week, I think that will be a big game changer. Interest rate cuts will be a big game changer for housing finance companies.
All right, so that's about housing finance companies and especially talking about Bajaj Housing Finance. But let's talk about Bajaj Finance, Kunal, because this one also is no doubt reacting to a news flow. But we have two of our viewers who are asking about Bajaj Finance. One is KV Reddy from Bangalore, wants to know whether it's right time to go ahead and invest a lump sum of about 1 lakh or so in Bajaj Finance. While on the other hand, we have Lakshmanan, who is a senior citizen, age of 75 years right now. And he's bought a few Bajaj Finance shares at around 7,100 rupees, and he's losing a few thousand. He wants to know whether he should add some more right now in his portfolio for Bajaj Finance. So what's your take?
So I understand that it's a quality name. Of course, the stock has done exceptionally well over the long term, over the last couple of decades and more. So I think in that aspect, of course, it's a good stock to have as part of your portfolio. But when I look at the charts on the short term basis, the stock in the last 3-4 months, there's a lot of drag into the stock, which indicates that maybe it's getting into a point where the stock is going through a time-wise consolidation. Maybe this consolidation could continue for a few more months, couple of quarters for the stock price. That's the only catch for a stock like Bajaj Finance. Now, in terms of prices, yes, the stock has come back towards a good support point. 6,300 to 400 has been a very good support for Bajaj Finance over the last 1 year, 1.5 odd year. I think it's gone through almost 3 or 4 major retests towards the 63-6400 mark. So if you're looking to average further, just to ensure that you bring down your cost price from 7,000 plus levels to maybe a moderate 6,500-600 levels, then I believe that 6,300 to 6,400 could be a range where you can look to average further for Bajaj Finance.
On Bajaj Finance, but another large cap company where we have query is Reliance Industries, wherein Kunal, Nikhil Sharma is already holding shares from a price of 1,287 rupees. Good to book out some profits or continue to hold on?
Continue to hold on as of now, but I would suggest that keep a stop loss if you are a very short term trader. I think only in that aspect, keep a stop loss which should be, I think, around the 1250-55 mark for Reliance Industries. It's not as if that the stock is showing signs of extreme weakness, but the susceptibility of the stock and the vulnerability of not participating in the market bounce, I think that's one of the concerns for Reliance Industries. So on the way down, when the markets were going through a correction, this stock fell sharply by a margin of 20%. In the last 2 months, 2.5 odd months for Reliance Industries. And then when the markets are going through a process of a bounce by 4-5 percentage points, this stock has been a very late bloomer in terms of participation. So that's the only concern for Reliance Industries, which means that maybe there could be a point where the stock may drag, consolidate, provide those whipsaws and volatile moves. So I think in that aspect, I would suggest to keep a trailing stop loss of 1250.55 for Reliance Industries and continue to hold on.
Alright, this one's coming from Srinivas. He's writing to us from Dubai and he's a long-term investor. He's holding Aarti Industries, 300 shares at a price of 625 rupees per share. Gaurang, he wants to know whether he should add some more in his portfolio right now or what should be the strategy for Aarti Industries.
So, Cheryl, prudent to give a disclosure first. We have coverage on Aarti Industries from that chemical, specialty chemical sector. Saw a sharp correction from 600 plus levels to close to about 450 or close to 400. And then the stock is trying to find its own bottom. Numbers were disappointing, but from a long-term point of view, believe that the entire specialty chemicals and agrochemicals sector is positioning itself to take advantage of China plus one, Europe plus one. The only thing is that R&D related launches, new launches, is taking a while to come through, and of course the capability of scaling up on the export orders. You bought it at 600 plus levels, currently at about 450, sub 450 levels. If you are a long-term investor, I think it will be prudent on my side to give him an advice that, yeah, you should definitely average so that you can bring down your acquisition cost, increase the number of shares that you have, and then give it a long-term time horizon for a profitable exit.
All right, that's the take coming in on Aarti Industries. So moving on then, and Kunal, share your view on Praj Industries, because Amit from UAE has been holding shares from rupees 600. What should be the target in the next 12 months? Because what I see, Kunal, is that the stock is already at an all-time high levels, and what a move coming in for this particular stock, but still some upside left?
I definitely think so. Still some upside left. Now it depends on your time frame, what you're looking out for. If you're looking out for, say, for another couple of years, then maybe I think 900, 950 thereabouts could be a decent target which you can keep, because post that there could be a point where even if the stock moves up higher, eventually the stock should settle back into a range just around the 1000 mark. So maybe 950 thereabouts is where you can look to start booking out profits if you're a investor who has a time frame of just about a couple of years. But if you're someone who's looking out for maybe 5 years, 10 years plus, then I believe that the stock still holds much more stronger prospect on the longer term basis. This is the third or the fourth consecutive year where the stock could close with stellar price gains. So I think after such kind of a scenario, there could be a possibility of maybe a couple of years of consolidation on a broader basis. But then these are the kind of opportunities which stock result into big breakouts on the long term chart. So it all depends on your time frame. If it's for a couple of years, then I would suggest to maybe keep targets in the range of 950 plus.
Coming back to you, Kunal, Kusuma from Pune has written to us, wants to know about Bharat Forge, Zydus Life, JSW Energy. Out of these three, which one do you think looks good to end for a period of 3 to 6 months?
I think Bharat Forge, JSW Energy, as well as
Bharat Forge, JSW Energy and Zydus Life.
Zydus Life. So I think I would probably pick Zydus Life as well as JSW Energy. Now JSW Energy could be a slight higher preference stock because of the way the long term charts have behaved. The short term correction, I think 15 to 20% correction has already happened for JSW Energy from 750 thereabouts to 650 odd levels. So which means it's an attractive price territory to look out for. Zydus Life also is the other stock which you can look out for. That's a stock which has done exceptionally well. Pharma stocks overall have been showing signs of a lot of consistency. So I think in that aspect, that's another name which you can consider adding on. Bharat Forge, the only concern which is the lackluster trends, the false breakouts the stock gets into on the medium to long term chart. So it's not as if that the stock has not given any major breakout, but post the breakout, maybe in the matter of few weeks, the stock tends to fizzle down back again, and the momentum subsides for Bharat Forge, leading to the stock coming back into a corrective phase. That's the only concern for Bharat Forge. That's why I would prefer the other two names.
All right, then moving on. And Gaurang, I'm coming to you for the next query. This query is coming in from Balan, and quite an interesting one because he wants to start an SIP in equities, and he has listed down 5 stocks and wants your advice which of the stock that you like. First up is Siemens, second is Polycab, the other one is Tata Elxsi, as well as HAL and Bharat Dynamics are the 5 counters that he is looking at. So, any stock that you like for an SIP investment in equities, Gaurang?
I think the identification is quite smart, very strong names. Unfortunately, we currently are covering Tata Elxsi, I remember very clearly, for Hindustan Aeronautics and Bharat Dynamics. I think some time back, when the IPO was there, we had covered by IPO note, but now the valuations have reached me another level than what they were at the IPO time. Now, so out of the stocks that he has chosen, I think Tata Elxsi is what I would reckon with. I would also say at the same breath, though it is not a direct recommendation, that Bharat Dynamics and Hindustan Aeronautics are also strong competitors in terms of performance, order book, and earnings visibility. Not a direct recommendation of buy, sell, and hold on BDL and HL. If I have to suggest totally different 5 stocks, keeping in mind that he's new to the market, and whenever you are new to the market, you should possibly stick to the basics. So I would recommend 5 stocks from different sectors: L&T, Reliance Industries, Ultratech, HDFC Bank, and possibly Mahindra and Mahindra. And I think all these 5 names would be possibly appearing on each and every fund manager's large cap fund names. So I would prefer these 5 names.
All right, watch out for those 5 stock names that Gaurang has mentioned. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere.
Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries then. And for the next query, Kunal, I'm coming to you. This query is from Chandrasekharan from Chennai, and he wants a take on Tanla Platforms. He's already holding 200 shares. Buy price is 990 rupees. Good to average at these levels or book loss. He can continue holding it for the 1 year. And wants to know that does it has the potential to like cross 1300 levels as well?
So I'm not sure whether 1300 could be crossed in the next 1 year for Tanla, but maybe I think the stock would just about consolidate. So it's not a very attractive chart when we look at this, whether it's in the last 1 year, whether it's in the last 3 years. I remember there was a point when the stock was almost at 2000, fell down to as much as 600, bounced back towards 1200 mark, and now it's come back to that 700 kind of a range, which means extreme volatile moves for Tanla Platform. So I think that aspect, I don't expect a major bounce back or a recovery unless you see a major recovery coming back into the markets in the mid caps and small caps. They start to outperform. So if that happens, only then I would probably expect the stock to do well. But I think it also makes sense in case if the stock comes closer to your cost price. I believe that it could be a good time where you may look to exit the stock and revisit and try and venture out into some other solid large cap or solid mid cap names.
Actually, coming back to you, Kunal, because we have a lot of short-term queries. This one is coming in from Tom Zerbergis. He wants to know about Power Grid, 200 shares that he's purchased at levels of 358 rupees per share. He wants to know what's the view on Power Grid for the next 6 months. He wants to know whether he should hold on to it or look to exit from this one.
I think you should hold on to the stock. The recent high for the stock, which was made around 345, was around the back of higher volumes. It's come back to sub 330 levels, which means even if you're a short-term swing trader, you can expect the stock to come back towards at least 345 plus mark. And in case if the stock happens to break out of that 345 levels, say on the back of higher volumes, then it could provide another impetus of 15 to 20 points on the upside. So it's a good stock to hold on to. I would suggest to just about wait out for a point when the stock nears or comes closer to the breakout of 345.
All right, the next query, Gaurang, is coming in on NTPC Green Energy, one of the recently listed counters, wherein Venkat Ramana from Hyderabad is saying that he got the IPO allotment. But what's the long-term take on this particular stock? Good to book out some partial profit at these levels or continue to hold on? And even Nikhil Sharma is interested to know that is it still a good buy at current levels?
Firstly, Srishti, I think if you're a long-term investor, you should not look at short-term, medium-term gains. As a disclosure for the IPO NTPC Green, we had given a subscribed recommendation. The floor was between 102 and 108. Shares were issued to the public at 108, which is the higher band. And in the next 3 years, I believe they have got some huge plan in terms of the capex that they have lined up. And the kind of appetite that India has for power, it is only going to multiply as we are going to need more and more power. And as we progress further in terms of becoming the next trillion-dollar economy or a great manufacturing hub. So if you are in for a long term, hold on for long term. If you're looking at buying the stock, then I think wait for a dip, maybe closer to maybe 115 or 110 or maybe closer to the IPO price. If you do get an opportunity, you should definitely look at investing in the stock from a long-term point of view. This recommendation I'm giving, keeping the base as the IPO note.
All right, let me take this next query then, and the next query that I have is coming in from Puneet. And Puneet, apologies, we've not been able to take your queries for the past few days. Today, I am going to take, though you predicted that I may not take your query today, but I'm taking your query on Adani Energy Solutions, Kunal. 815 is his buy price, but he wants a very, very short-term target, 10 to 15 days target. Is it possible to predict the charts for Adani Energy right now for that shorter time frame?
See, very difficult because the stock has been into a thick of news flow, and if the news flow continues to come into the positive side or negative side, the stock may continue to remain into a much more volatile manner. But the only thing which I can observe on the charts is that there was a gap which was created, I think 1 week, 10 days back, when the news flow had started to come out on the negative side for Adani Energy Solutions, etc. And that gap has been filled. So which means that the stock should now get back into an ideal corrective mode. So unless the stock breaks past about the high of the gap, which I think is around 900 mark, 900, 905 to be precise on the spot basis, then I think unless the stock breaks past about those levels, I believe that there's a high chance that the stock may consolidate or even correct further.
All right, that's the take on Adani Green. But Kunal, let me once again get back to you. This query is from Anu from Gurgaon, holding AB Capital from a price of 226 rupees. She has 500 shares in her portfolio. What's a short to medium term view on this particular stock?
So I would continue to be bullish on AB Capital. My sense is that 180, which was hit in the recent correction for the stock, seems to be a good base for AB Capital. In case if there is any kind of a corrective phase back towards the 180 mark, I would suggest to average further at those levels and try and reduce the cost price from those elevated 220 plus levels to maybe closer to 200 or sub 200.
All right, so that's the take coming in on AB Capital. On that note, thank you so much, Kunal, as well as Gaurang, for joining us on the show, for taking all the viewer queries. And viewers, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we have an interesting conversation lined up for you, so don't go anywhere.
Optimism builds around the banking sector. Experts see opportunities in the consumer-focused lending and diversified financial institutions. From PSU banks to private lenders, the sector appears poised for steady growth amidst robust demand. Let's listen in to what Harmat Izil from UBS Wealth, Ashish Gupta from Axis Mutual Fund and Vikas Khemani from Carlanian Asset have to say on the banking space.
Consumers at zero growth, for me, that's a very clear opportunity here. Financials also, especially banks, right, have been a bit of a laggard for the longest time. It's also, right, I think the softest point for them.
I think in financial, the trend is quite clear that really the banks are holding up much better than NBFCs. We are also seeing diversified non-lenders continuing to do well. Whether they are capital market companies, platform companies, and even insurance companies. I think large banks and insurance companies within the financial pack look the most interesting to us besides the platform companies.
My opinion, where we found good, bets on especially PSU banks and some of the banks where, without much change in the business, dynamics, you've seen good 40% kind of 30 to 40% kind of corrections. We find that pocket very interesting, and that's where we've done a little bit of shopping.
All right then, but with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. It's a goodbye from me and the entire team who put this show together. Thanks so much for tuning in.